Welcome everyone to the Kindle Report. It is the final report for the year, and I'm in the process of, before we get into tonight's video, in the process of figuring out when we'll come back to the daily videos. And it's right now it's looking more like the 9th of January. So I hate, that gives me more time off, but I will do something that week. I'll try to get something together. It's just the way the holidays are following this year are not good. Travel time, all kinds of stuff, is a lot of conflicts coming back. But when we come back, we've got a lot of big plans. So looking forward to the break. I want to thank everyone here. I know we have a lot of folks that come on here every night. Appreciate everybody that shows up, your comments, everything, participation in everything that I do, from software to the channel itself, to live room, indicators, all this stuff. I really appreciate it. It's been a pretty amazing year, actually, as I kind of reflect. So let's get into tonight's video. I'm going to try to do my very best to set this up. What we're going to do is try to line up everything, looking at the weekly algos the best we can, try to set up some patterns and things of that sort. So we'll get into it. I will try to have some activity on Twitter. So if you're not following me on Twitter, make sure you do that. That's PortfolioXpert on Twitter. No E in the expert. So let's talk about today, huh? What a day it was. We saw just relentless selling again. And what I want to talk about is, I know the main news lines were out there talking about retail sales. That was part of it, but minus 0.6, the end of the world, down through over 3% at one stage on the S&P. I don't think so. I don't think that was it. But the title of this video tonight is Central Banks Turn Evil. And I've never seen anything like this, I don't believe, from the standpoint of, I guess, the concerted effort. I watched the brief announcement. Somebody posted the brief announcement from the BOE, and they're all talking the exact same game, the same numbers, 2%. I've talked to you about all this, but they're just like Lagarde made a comment. This is where I think really triggered the sell-off to start the morning anyway, was really when Lagarde said, she said, we've got a lot of work to do, no pivot. Because they don't want to give you a chance. They don't want the algos or anybody to even think they're at a point of pivot. Now, I did see, oddly enough, on Bloomberg in the last hour or so, I had it on for a few minutes and to see what the talk was in Asia. And the Philippines central bank guy was up there, and he said they're at 5.5%. Their inflation rate's around 8.5, 8.6. And he said, this is it. We're not going to, next meeting, we're not doing anything. And the announcer was really drilling him. Well, everybody else is. He's like, this is it for us. It's consensus 100%. We're not doing this. So it's kind of interesting. I talked to you about last night. Japan is the only other bank. They're still doing QE, and also Turkey is still doing QE, and they have 80% inflation, and somehow the lira is hanging in there at some way, somehow. So it's very interesting what's going on. And the reason why I think these guys are getting evil is they're really driving it home. Think about the time of year it is, right? Merry Christmas, everyone, right? We're going to destroy the economy for you. I've been telling you on this channel for months now, these guys want to break something. They want you unemployed, and they just can't seem to break anything. So let's talk about some numbers that came out that nobody was paying attention to yesterday. Claims came in at 211, a little less than expected. The continuing claims were basically unchanged, so nothing changed there. I've been talking to you folks about that number, and I really believe that that they want to see that number back over 2 million, and they just can't get it to move. You know, remember back in the day when we were at 1% inflation and they wanted 2 and we couldn't get it? Then, of course, the pandemic happened. They dumped trillions and trillions of dollars into the markets. And then if you go back and watch some of my old videos in 2020, I said they need a good partner to be able to allocate this money out. They need somebody in the Treasury. They need the government to spend the money. And boy, they got the best people in the world. They got Grandma Yellen to be in the Treasury. They got Joe Biden. They got all these people in there, and they're just, let's spend another trillion and 1.7 trillion, and let's dump everything on it. And so, oh yeah, but while we're doing that, let's make sure the U.S. can't produce as much oil as it can. Let's throttle that back. So all of these things have happened, and we're sitting here, and now what we have is the central banks really trying to crush the markets. It's interesting. I'm anxious to see what kind of numbers I get out of our database tomorrow night. I'll be going through that here in a few minutes. And on the intermediate models, as the intermediate models, I talked to you a lot about the forward-looking stuff. So I just said they want to crush the economy, but I think the markets are still looking beyond. You'll see when we go through the technicals, some things happen today. As ugly as today was, some things still happen that gave a little light of encouragement or some hope that's still out there. And like I said, my whole goal tonight is to set you up for the next several weeks. It's possible. Listen, I'm going to just leave it open. I may magically show up and do a video, but we'll just going to have to see how everything plays out over the next several weeks. So I appreciate everybody. Listen, I don't get a lot of time off. I work hard, got a lot going on. So I appreciate everybody being patient and wishing me well. And I do this every year, so it's no surprise. Okay, so let's let me look at some more of my notes. The other thing that we saw come out yesterday, retail sales down minus 0.6, not good. All the categories in the discretionary categories were down. There were a couple specialty stores, and I think business in bars was up or something like that, and drinking bars, right? But the Philly Fed came in minus 13.8, Empire State minus 11.2, industrial production minus 2. Tomorrow on Friday we get the IHS services. Nobody really cares about it, but it's expected to be down. So all the PMIs, all of the metrics are starting to implode. They're starting to get really happy. The only bullish thing, we were in the live room today, somebody pointed out that Peter Schiff is like super bearish. So that's kind of bullish in itself. That's like Harry Dent coming out and saying something. So, I mean, you got to fade Peter. I don't think he's been right in 20 years. But the bottom line is really what's happening out there is they are making a concerted effort. It's all about inflation, and they're going to drive this narrative. I told you a while back, probably 2 months ago, that they're not going to change this dialogue. They're going to stick with it because it's all they've got. But, our central planners aren't very good. These people are terrible. There wasn't one of them that had one dot plot last year that was anywhere close to, 4.5%. Nobody had anything like that, right? They were at 0.7. I think the highest was 0.7. So these folks don't have a clue what they're doing. They're just taking all these actions. And I saw another dialogue. I'm trying to get out of this loop I'm in here. I saw another comments by a central bank. I think it was the BOE guy was just talking about, we have to raise rates. We know it's going to be painful, and it's not a good thing for everybody, but we have to do it because we got to beat inflation. Inflation is the demon they're trying to beat, and the only tool they have is raising rates and destroying the demand on the economy. Meanwhile, we're not really seeing, for me, when I'm looking at things, I'm looking at crude oil. I'm not seeing the destruction there that we saw before. We did see a lot of things going on in crude, actually declining where we got to $70. I'll go through that as well. So let's get into the database and get into tonight's stream. I will cover the Dow tonight, and at the end of this, I'll do my best to get through all the pertinent stuff. If you have some questions, things you want to talk about or want me to talk about at the end, I'll spend a few minutes with you folks and look at the chat line so we can see what's going on. So let's get into the database. All right, so big activity as you would expect today. 2,748 sell signals, 220 buys. We're down to 61.55. I told you probably 4 or 5 days ago that we would get down to 68 to 62. We are there. We'll see how they stabilize tomorrow. I'll try to put some things out on tomorrow night if I have time, or Saturday morning on Twitter about what the run looks like. But as far as it goes here, this is exactly what was expected. We've been absolutely I'm just trying to see if I thought there was a troll here. We've absolutely seen this come back in. As long as we stay over 42%, I show you this chart every night that what's going on. Sorry, some of these icons and stuff that somebody's putting up, I keep thinking it's one of the bots, so I won't pay attention anymore. Here we go. So yeah, so all this liquidation that we're seeing in the database is pretty typical. It's not a disastrous scenario. I think the most important thing will be how we come out tomorrow and looking at the intermediate. I'm going to go to full page here and just go over to the weekly so you can see these numbers. And what we're looking at here is 49.87. So we have 7,948 symbols still in trend mode. That's not going to change much. I actually expect to see the database improve, stable to improving just a little bit, because while everything looks like it's looks like a disaster rolling over, it's really not. We're still in that trading range. I'm going to show you something here in just a minute that we're still consolidating this pattern here. And I know a bunch of folks are probably, oh, no, we're going to zero. I don't think we're going to zero, but we are possibly seeing some. I told you we're going to see waves where we see lots of tax loss selling, a lot of things, and just one wave after another, wave down, wave up, and we've got, a better part of 2 weeks to go in this year yet. So we're just going to see this choppy mess, and I'll lay it all out here in a minute. But this intermediate database, it's as long as it stays over 42, we're going to be in good shape as far as further consolidation as we come into 23, looking still positive. I'll show you this chart that I've been bringing up every night. So let me just bring that up again real quick here. It'll only take me a second to pop this up. But this is the chart that I've been showing you, is basically what happens with the database. We get this traction. We're just here at around 49%, and we should see markets start to get more traction as we go forward. And it doesn't have to. It can fail. It can go back under 42 and roll over. So I'm just saying, normally once we get to that level, it's pretty stable, because these are charts that are looking at much larger patterns, and you can't trick the intermediate as well as you can on the short term. So a lot of our short term models they move very quick. The cycle range on those are only about 35 to 50 trading days, a holding period on our short term. On these, they're 200 plus, 200 to 240. Typically, doesn't mean they have to. I've seen cycles where we get a failure, and maybe all the stuff I'm talking about here on the Fed, maybe there's a failure coming here. Some of you will go, yeah. Some of you will maybe not agree with that. But most people are probably going to agree there's going to be a failure here. I don't see that. I want to see the evidence in the data. If I don't see the data, I don't want to sound like Jerome Powell, but I have to see this data. And when I see the data, I'm going with the data, and I'm going to follow through, because you have to understand that this database that I talk about, what I've got up here right now, this has been my life since basically 1996, 98 is when this started to evolve. There used to be only 4,000 or 5,000 symbols in there, and then we've up to 16,000. That includes bond ETFs, mutual funds, equity mutual funds, ETFs, and individual stocks. So it's quite expansive, and especially when we're looking, the difference is just looking at trends, not something that, I've seen people do things where maybe you're looking at X amount of stocks over the 200-day moving average. Well, 200-day moving average is just a number. And while that can be a metric that can give you some insight, it's really much different, because what these are trends and expected holding periods, and it's being monitored and updated incrementally. So it's quite adaptive, and that's why I go through all this trouble. So as we come into the end of the year here, this is important to understand that there is some metrics behind this market that are much more positive than it's going to feel, especially after a day like today. And I'll just go on to a little bit more of a rant. It's important, and I do this, like I literally walked away from the screens. We're in the live room today. Did not look until I started prepared tonight at anything. I tried it the best I can to detach from what happened today. And sorry, I try to detract myself as much as I can. I want to be completely distracted. Don't want to think about it. I want to try to come in as objective as I can. And as I come into the weekend, I do the same thing. I literally shut off. I don't look until Sunday. So step away from the markets, get rid of the emotion. It's like anything. If you step back, you get angry. If you put some space in between you and whatever it is, you'll think a little clearer. So just a little tip. That's something I've been doing for a very long time, and it's really been a great thing for me because I seem as close as I can coming in with a reasonably clear perspective without the emotion of what happened today, whether it was a good day trading, bad day trading, whatever it was, it makes it. So just a little tip there. So let's go ahead and let's get into the technicals, and I should be able to get through this, and we'll come at the back end. I'll spend a few minutes with you guys. All right, so we start off here every night. This is probably going to be a feature you folks are going to miss. You don't have to miss it though, because you get the indicators. You'll have this on your screen. You can have this whole setup here. What I've got is PPM 123 and the Wavetech 200, and then I've got market grid up here. Got Fibonacci targets. Got a bunch of stuff on the screen going on, and got the 10, 21, 40, and 200 period moving average. And this is a 1 hour chart. And it looks like, once again, we're looking about as we come into, we should start to stay stable, maybe improve a little bit into London. And on the PPM 1, it looks like we're going to stay above the 10 period moving average, simple average, 39.24. I'm going to show you something here in a minute that I was looking at, and I just started shaking my head. It's unbelievable on some of these numbers that goes on. All right, so let's take a look here on PPM2. Really just flat, stable, which is negative. So what's happening is that 21 period moving average is going to be resistance. We also have some fib targets in here on the hourly. 39.46 min, 39.61, and 39.70. And I know these numbers are over on the side here. Now I know exactly what people are talking about. I am going to fix something, folks. Give me 1 second. I have not noticed this until just now. So now you can see the numbers. You should be able to see them. I apologize. I just happened to notice this, so it should be all there right now. You can see they're small, but they're over on the side over here. So you can see high and low targets over on the right. I know if you're watching this on a phone, probably isn't going to help, but you can snapshot it and blow it up if you have to. So this is the patterns that's setting up there. So let's go ahead, go to the daily. So remember, my goal here is to kind of set up the daily and then the weekly. The daily is suggesting that we're likely to have a bit of a rebound. It looks like to me over the next, maybe between Friday and Monday, we're likely to see potential getting back above the 10 period moving average. What's the number I've been talking about for a while, for last week or last couple of weeks? The 40-day moving average. I want you to look at the number here. 39.2506 is the 40. This is on the futures and near futures. 39.27.25 was close, just above it. So far tonight, we're looking at the 40 at 39.31.47, 39.31.50, right on the money. So this is going to be the number to watch. It does show on the PPM 3, which is tracking that average, that there is more flattening out that's going to happen. And I went through a lot of detail last night about the pattern that's going on. And I see John's talking about choppy. It's just, it's okay. It is choppy. This market has went nowhere. If we went all the way back to, well, let's just say back to November 11th, we've been in this same range. The lows have been right in that same range. We had a 39.14 low here. We had a 39.55. Today we had 39.08. And if you look at the highs, they're very similar as well. And this has just been that choppy range. We're not seeing a big acceleration to the downside, and I don't think we will from that standpoint. I'm going to run. I'll probably go over to TradeStation and bring up some potential Fibonacci's here in a few minutes. But let's just go through this normal analysis I do every night. So let's take a look, and let's go over to the weekly. And weekly is very interesting. We got a big reversal. Last week's low was 39.14. The high was 40.75. So we have the potential, and this is going to be contradictory to what I just said, okay? We have the potential, if we close, all we have to do is close under the 40, and let me get that number for you here right now. The 40 is 40.22, so pretty good chance we're going to have to rally pretty good tomorrow to avoid this. But if we stay under here, we have an outside bar here, which here's the thing I want you to watch for as we go through the rest of the year. So if next Friday we're closing lower and we did not make a higher high, which I think there's a low probability that we will make a higher high than we did this week, especially since we printed 41.80 and we're trading 39.32 right now. So if we close lower, then we have to make a new low. So we have to print through 39.08, and we do that, and we close lower on than we are. We closed this week, wherever that number is. Okay, we haven't closed yet, so this is Friday's close. If we do all that and we close lower, then we're likely to get 2 or 3 more weeks down. And this chart is what I've been telling you, is that we had maybe 1 more week where we're going to stay in this choppy range, and it looks like some selling coming into year end. So that's exactly what it looks like here, is we should get some selling in the next couple weeks. The PPM 1 is, let me just get to let's get to the year end. Okay, this is it right here. We're looking at the 10-period moving average still being up. The probabilities are that we're going to stay above that 10-period moving average is pretty good. But if we get this pattern I just talked about, we get this reversal confirmation, then we could easily trade all the way back down to the 200-week moving average, which is going to place us at right now. Let me get this on screen so I can see it here. 37.42. That would be a huge number. That would put us back at the November lows here. That was 37.38. So that would be the potential if we get a lower close next Friday. So let's take so that looks like the expectation, and I'll go through the same here for the NASDAQ and the Russell, but it looks like we've got possibly 1 more week of stability, meaning we stay in this range, and then it looks like we have the potential of declining down, potentially testing this 10. These values at one of the things, if you have the indicators, you guys mostly know this, but if you come to this, you can put your cursor on it. Next week, this upward pressure is still going to be at 0.66, so that's still in trend mode. And the following week, as we come into year end, and we get to we're still going to be at 0.42. So that 10-period moving average is going to be key. So watch that area really close as we come through and come to the year end. Probabilities suggest that we're going to actually stay above this and probably continue to be in this choppy zone. And I think that's, we could see a spike down. I don't think we're going to see 37 handle, but I just want you to be aware those are probabilities right now. There is neither an uptrend or downtrend. I'd say there is an uptrend on the intermediate, but if you look at this is probably where the real negative comes in. If we look at PPM2 and we go out 2 weeks out, it's suggesting we're going to be negative, so we're going to stay under the 21. So there's a definite mixed picture. I think the key element here is going to be watching this outside reversal. We've seen this pattern before, covering the NASDAQ next. What we're seeing here is we close below the 40, and so the algos are suggesting that we're going to see it get back over the 10. So this is going to be key. Tomorrow, 11,679 is the 10. We're trading right now 11,484. If we get back above there, then it's going to stabilize this thing. And it's just amazing to me that how this pattern has been continuing to unfold here as we go through everything. But here's the pattern that I've been talking about. It's just this is zigzag pattern here. Question is, does it stay in the box that I showed you last night? Does it stay here in this little box formation, or does it break out and start to make a directional move? The PPMs here, this is daily, is you see them turning up on at least PPM 1 and 2. So looks like at least we get a little echo bounce here, and we'll look at the numbers from the standpoint of the market grid there. Let's take a look at that real quick. So market grid for tomorrow is telling us that we've got S1 13,648, and we've had a low of, right now let's establish a low, 11,446, 11,487. So fairly tight range overnight right now. And this is the daily chart. But we look at the grid, probably S2 is going to be the key element, S1, R2. So I'm going with the volatility kicked up as high as we are. We look for S2, R2, same thing on the same thing for the S&P as well, folks. All right, let's go to the weekly here on the NASDAQ. So the basic setup is going to be the same on all of these indicators. So we're on all of these indexes. So look at the same thing. We're looking at after the next week or so, we're looking at declines coming potentially across the board here. Whether they retest these lows. We do have, this is a weekly again. And by the way, those weekly reversals are pretty brutal because the the pattern that I'm talking about here is actually for when you get the outside bar, we're looking at 3 weeks down. That's all the way into the first week of 23. So pretty ugly way to finish if this actually unfolds. The trigger will be that we close, probably have to close in the lower 60% of the range in all these weekly bars. Give you just a few more rules. And if we get that and we close lower next Friday, then look for that pattern to go unfold. If you wind back and you go back and watch my January of 2022 videos, after actually it'd be 1st of February, that we got an outside reversal in January of 2022, starting this year. On the month of February, we got a confirmation. We made a lower low. This on a monthly basis. We got that. If you recall, it led to a quarterly shot and led us down all the way down into Q2 and into Q3, where we were finally started to print some lows and found some stability. But all of that was set up. It started from a 3-bar trade like this. So these can be very significant. We're also looking at this. I'm looking at the chart here. The 40-week moving average, we basically rejected right off of that. It's like perfect rejection, which is similar to the 200-day. So we've watched, I think, 3 hits now. You can see it go all the way over to where my cursor is here. And we rejected off the 40 there. We rejected off the 40 in August. And then we've got another rejection here. So the only thing, like I said, all the algos on a weekly basis are suggesting weakness into the end of the year. And how drastic does it get? We don't know that, but if we get the breakdown below some of these levels, you should be able, if you have the indicators, you should be able to bring up the fib targets and come up with some targets off the daily. And who knows, maybe we get some targets down off even the weekly. So definitely looks like weakness coming into year end across the board. I haven't seen anything to convince me of anything different. And it's just a matter of what the magnitude is. And if we get this confirmation as we come into, this will be a week from tomorrow when we have to close lower. We just can't make a higher high. The probabilities of taking out this week's high next week, I think, are pretty low. That would be a crazy situation to happen. I'm going with it. We won't do that. We have to make a new low from this week and close lower on the week. So we haven't closed yet, so take the Friday close and figure out all these numbers. That's a pretty important pattern that's out there. So I know sometimes people try to always put me in a box, and I wouldn't say, as I said last night, I'm not bullish or bearish, and we're in this consolidation phase. We break out of this thing, things could get ugly pretty quick, and the database could fail. We could get back under 42%. Whole lot of stuff can happen here, folks. There's nothing guaranteed. And as I talk to you about this all the time, you should figure this out, that really the markets are about probabilities. And there's a pretty ugly probability that showed up this week. This ended up to be a huge week starting, which is bizarre, started with the CPI surprise, right? Like, oh, it's less than possible. Then we get everything we've seen since then and a massive amount of selling. But a lot of this could be year-end stuff. There's a whole lot of influences out there. It's really crazy. So we'll just have to see how things start. And if we started on a really weak 23, like I said, I'll do some Twitter stuff. I'll be watching the market. So we'll see how detached I can stay as I'm gone, especially with this setup. I'll maybe try to put some stuff out on Twitter. So make sure you follow me on Twitter, PortfolioXpert. There's no E in the expert. So portfolio and then just expert. So, but everything's set up like this, folks. Let's go ahead and take a look at the Russell. Yeah, I haven't figured out why I'm not getting the algos to do something. Let me just bring up a setting here. I just want to see if I can get something to come out of here. Okay. Yeah, there's just the data that is look back data is bad. So let me fix this real quick, folks. I'm just changing the coefficient look back, and just so there's enough bars here. We'll stick with these three. So you can see everything is kind of moving lower. The Russell might be the best to look at. This might be the best to look at just from standpoint is it's been leading, and I've talked about this, it's been a leading indicator all along, and this is the weekly that we're looking at. So this is a bit of an issue from the standpoint, like I keep saying this whole broadcast, everything looks weaker into year end. If we get a reversal, it'll probably stay within the range. I think the prints that we saw this week are going to be very substantial from the standpoint of what these overall patterns are going. And you can see we have market grid has turned down here on the Russell. Algos are suggesting that we're going to see further weakness there. I haven't been able to find anything that tells me any different. So that looks like the setup. There's no reason really to look at the daily patterns. The bottom line is, looks like weakness across the board on all these indexes. All right, so let's take a look at the 10-year and look at the downward pressure that's starting to roll in. I talked a bit about this. Absolutely amazed here. We're printing right back at 340. And I keep trying to, how's the best way to put it? I keep trying to argue that we're not going to print down to some of these crazy numbers here. Let me turn on something here. Here it goes. So I put on the fib targets. And look at the targets here. We have, I'll bring them up over here on the side. So we have target one, 3.37. We've talked about that, basically where we're trading right now. Target two this is on a weekly chart, 3%. You know, wait a minute. I thought they were raising rates. They are. This has everything to do. I saw somebody talking about that the people are buying the back end of the yield curve for a hedge. That's not what's going on. Okay, it's just demand on the back end of the curve is gone. This is where you're going to see the true weakness in the economy being reflected in that back end of the curve, and that's the point of the inverted yield curve. It's just getting worse. So it's going to be very interesting, folks. I'm anxious for 23. I think that you know, I just got to come up on screen here. I don't even know how to. When I look at this, sometimes it's hard to believe the numbers that you're seeing here, but we are actually talking about the 40-week moving average right now is at 3.2, and I've talked about this, 3.25, 3.25, 3%. The extreme on this is 278, 280. I mean, that's just insane number. I don't think we get under the 40-week moving average here. I think that 3.25 would be an extreme, and I think if it did print there, it would be a very quick pop, because I think if you own the bonds right now and you're enjoying this rally, you see 3.25, you're going to have to sell something. You're going to have to take profits on there. So, you know, a lot of the big banks and a lot the folks that are trading this, they're not just buy and hold. They're not a bunch of 60-40 players. What they're going to be doing is they're going to be trading out of this stuff. I think that it'll be interesting. So those of you have the market grid, we should see market grid turn down on Monday for next week's action. So we're going to have even the market grid participating, probably projecting close down to that 40, down at that 3.25. Insane numbers. I know it doesn't seem to make sense, but that looks like what's going on here from the standpoint of the configuration here on the yields. So the peak is the overhead is pretty substantial as well. We're looking at right now, if I bring up just the moving averages, 3.52, 3.55 basically is going to be your ceiling right now, and 3.25 is probably your low. And we could see some pretty crazy things happen. And those of you that might be a 60-40 advisor or something, that's gonna be a bailout for you, even if we get some more weakness in the equities. But it's going to get really, I think, volatile in the bond market. I talked a little bit about this, I think, in the live stream I did yesterday. Everything blends together between my live room and live streams and things that we've done. But one of the things that we're definitely seeing happen is that the bond market is definitely becoming of great interest to on the back end. So there is a lot of buying going on there, but it's really because of lack of demand. That's why yields are going down. There's no demand out there as well. So it's easy to move this market right now. But as we go forward, the Fed if they're actually going to continue QT, they may be the seller that I just talked about at 3.25. They got to put out some 10-year at that point, and they've got plenty of them. So it may not be some institutional seller or somebody. It may be the Fed themselves that will come in on the back end of the curve, especially if it starts to get too crazy inverted. They have a way to control the yield curve by just going in and selling a bunch of these 1030s and work that out, so they can. That might be how they catch up on their QT and everything that they're doing. They haven't, like I said yesterday, we were talking about the Fed meeting and everything. They're really not talking a lot about this, the QT element. It's there, but let's not focus on that. They focus on inflation and the front end of the yield curve. That's all you're hearing from these guys. But they may be the actual seller there if we get to anywhere close to 3.25. So watch while I'm gone. If you see that, watch for a reversal. If you see a big reversal, looks like a big player came in, most likely it's the Fed. I know that had to trick you. Don't be tricked. I've started to go to the crude. We're going to the dollar next. So let's take a look at this and just stay on the weekly. What's interesting is all of these moving averages are rolling over. You can see how the algos are positioned here. The short-term PPM1 is starting to flatten out, but it's still very negative. So what's happening is let me broaden this out a little bit so you can see it. You've got the white line coming down there. That's the angle of attack down. That's going to be your ceiling for the dollar. But we're probably going to see more downside in the dollar ultimately. And that's probably, as I'll go to crude oil and then gold, but that's probably going to be a really good play for gold as we come into the beginning of the year. The whole pattern here that's set up is really for an extremely weak dollar. And you can remember 2 months ago, the talk was basically that, dollar's got the king dollar, and everybody was talking about, you knew that was the end. I remember watching a couple Bloomberg segments, and they were all over how high is the dollar going to go. Well, it was pretty much at the highs when they said that. And I'll just change the scaling a little bit, but there were some fib targets that I was talking about, and we got really close to those targets. The fib target was 115.68. The print high here was 14.77. So we got pretty close to that print, and that was the end of the party. This is a weekly chart, so I'll just stick with this. It looks like the downward angle is going to change. We're trading below the 40-week. The 40-week looks like it's going to continue to flatten out here, so it's rounding off. What ultimately should happen to watch for, I don't know if it's going to be able to happen before the year end. It's going to take probably 4 to 6 weeks for what I'm going to talk about to happen. But when you see the 10 cross the 40 on the downside, that will be a bullish sign that you're likely to start to see some bottoming action. So we're 3, 4, maybe as many as 6 weeks away from that event happening. Right now, that 10 is coming down. Let me just get the value here. The 10 is coming down right now on a weekly basis about 100 basis points per week. So you can figure it out. And the 40 is right now at the 40s at 105. So, you know, we're printing exactly. It's 3 to 4 weeks we'll be at that value. So expect to see that angle. That 10 period moving average is going to be your major resistance on here. And then we'll start to see the patterns maybe start to stabilize. But if you look at if the algos are anywhere close to being right, and these things are going, these algos and the AR, which is the auto regression logic that's in there, it's going to update as it gets real values on the next bar and has real values. It's developing off looking backwards on that 150 coefficient level. So it's really, but it's seeing this pattern evolving here, and it's not looking like it's going to go away, and not seeing any signs of real change. The only thing that could happen here is to see some stabilization, and we start to look to the market grid. But my guess is market grid will turn down next week, and we're going to have some lower numbers, and we'll continue on this downward slope right now. And I don't see, everything looks like liquidation mode here as we come into year end. So the indexes look like that. Interest rates going down. That's interest rates differentials on a currency on all the pairs. They're going to favor other currencies over the dollar, and that was the opposite was happening when we were seeing the 10-year print up at the 440 level back several months ago. So all of this looks like, based on the analysis of the interest rates, everything looks like we're going to continue to see this pattern just unfold here from, you know, as we go through the next several weeks. So just pay attention, just look for that crossover of the 40 and the 10, and when that happens, we should start to see some stability and maybe a potential to trade back above the 10 and maybe get some stability back in the market. Where that happens at right now, there is no downward projections at the moment on the fib, from the fib projections, but this is looking like exactly what should unfold as we go through the next several weeks. All right, so looking at gold and talking about this, we're sticking with the weekly charts here because it's really just trying to set up the balance of the year. Gold, interesting enough, this was the projected down week. We've got a range set up right here, and look to the market grid, folks, next week. So, you know, if you don't have the indicators, get them. If you do get them, you get to come into the live room, and I get back in January for a full month. So, you know, get signed up now. Don't wait. Don't go without these numbers every day. But look at the algos. They're starting to suggest we're going to see some more upside here coming into year end. Same with PPM2. And so it looks to me that we're going to at least maintain this pattern here we got down to 1782 today. I talked about potential 1760. We're looking at the 40 period moving average in here right now. We get that number is 1793, and the 200 is the big one, 1750. You see 1750, buy some gold. We should stay in this range and ultimately see markets start to turn higher as we come into 23. So typically what I try to do, and I'll work on this while I'm out, is try to come up with a scenario of what 23 is going to look like. So I will do my best to put some things. There's going to be some changes to the channel when I come back as well, and I believe I will confirm this, but I'll just tell you in the middle of the stream here is that the probably going back to the produced videos, 15-20 minute videos. I'll probably do intermittent live streams here and there. I won't be doing the super lives and for an hour every night. I'm going to try to consolidate this. I've got a lot of plans for 23, so really looking forward to everything, folks. And I am also, I know this is the middle of the video, so if you're hearing this, I am planning on doing Twitter Spaces probably next week, and a number of topics that I want to cover at that time. But the gold is in a great pattern here. We could get more of a right shoulder to set up again. At the moment, it looks like all the algos for the next several weeks are basically biased to the upside. Okay, we'll cover Bitcoin next. Weekly again. I just remember how these algos look, man. They were just looking like the end of the world was coming Bitcoin. Meanwhile, we're still hanging around here at 17,424. So everything just 100% stable. We had that one leg down, I guess, on the SBF news. Now that he's in jail, I guess we'll start to see some stabilization. It looks like, I said this before, it appears to me anyway, that most people actually pulled their coins off the exchange, and it probably stabilized. Just activity is way down. You could confirm that if you actually watch the volume activity. If I know there's stuff out there, not a big crypto guy, decided to start covering this a year and a half ago or so on a daily basis. But the big deal here is that things still have some downward pressure, still looking at some numbers here where the 18,100 is the key resistance, and it looks like we're going to stay reasonably under pressure. Use the 10-period simple moving average here on Bitcoin on a weekly basis as your resistance point. The only support I have, same support I've been talking about for a while now, is 15,255. We'll just call it. That's the big number. 15,500, 15,255. Below that, maybe you come down here, try to challenge some of these lows, but it looks really stable. All the algos are really looking pretty solid here. Okay, so that's going to do it. If you have any, is it really the year of the rabbit after the year of the dragon? Is that true? I just say, I'm looking at some comments here. So if you have some things that you'd like to ask me or whatever, say at the final video. Yeah, I guess, Raphael, it's about the best I can do with this thing. My suggestion is you folks just need to have these numbers right on you. Yeah, so Ed, yeah, thanks, Carly. Yeah, Ed, as far as that goes, for day trading, I see you use them hour chart and 5 minute and one. How would you recommend us to use this for day trading? And that's I need to take your question serious. Not going to be able to answer right now. It'd be pretty detailed, but I do need to make a video on exactly that. And we I think it was last Wednesday, and I need to do this as when we finish up this live stream. Download a video that I did in the live room. I know, Ed, you've been in the live room, so but I do need to get that exact video. That would be really, really helpful. Yeah, it was the year of the tiger. The tiger had his claws out. Just looking, Merry Christmas, everybody. Whatever the happy holidays, whatever your appropriate holiday is. And I really, like I said, when I started tonight, I really appreciate when we finish the live room today. Just for the most part, the channel's pretty clean. We get an occasional troll, the Frankenstein dude, some other folks that show up from time to time. But for the most part, I really appreciate the respectful attitude of everybody. You seem to treat each other really well. It's awesome to see. It really is. I've so enjoyed. I decided to do these live streams every day, and I've really enjoyed it. It saves. So I really want to get back into some focus on some things. But I'm just looking at some comments here. So just looking at, yeah, Casey, I will take a look at that. I've got there's a couple things that I'm going to want to be doing. There's a potential event in Europe that could happen in this not quite spring, in March. So I'll bring my gloves and my jackets. Yeah, I think on crude, did I miss crude? Did I do that? Because I don't remember going crude. Maybe I did. But anyway, yeah, so crude's just range bound. I did do it. 70 to 82 is a range. Appreciate that, Mark. Just looking here. Yeah, I'm so looking forward to this break. You folks have no idea. It's been a good year, crazy year. My trip to Europe was amazing. I actually, yeah, I'm ready to move to Italy. So anyway, everybody have a really safe holiday season, and we're going to do amazing things next year. I guarantee you. There's going to be training coming out on Wavetech and PortfolioXpert, a whole lot of stuff. So it's yeah, I don't know. I think I enjoy the live stream, so it's not that I don't enjoy them. I just think I've seen like an attrition on the channel from. It's not about views, but it is about helping as many people as I can. And I think the 12 to 20-minute videos were really, really good. On Super HD camera, all that kind of stuff was really good. And it made me focus on getting the message out really clear. So I get into ramblings in these live streams, which I know a lot of you like. I'll figure out sometime, because we will do some live streams and some things. So I want to stay engaged at this level. It's nice to have everybody there. Appreciate Ronald Ford. I haven't been to Australia since 1980 when I lived there. Yeah, there's I see Collection Services Corp. There's going to be, I think, some changes to how Live Room and everything. I would love to see a lot more people in there, and it's just trying to. What's really, there's time is all we have, right? And I have less time than in theory. You start to get above into your 70s, you realize that the clock is running. It's 2-minute warning, so you really have to pay attention to what you do with your time. And this is what I'm trying to do. I want a couple more years hanging out with everybody. We're proposing a conference coming this year, even in Scottsdale or San Antonio, Texas. Not sure where it's going to be, but we're definitely going to do that. There's some other things that I plan on doing. So, yeah, it's a long haul down there, Ronald. I actually have a really close friend down there. And so the guy that used to work for me in 1980, finally, he's retired and out of the business now. But some of us don't like to retire. Yeah, Vincent, I appreciate that. That's awesome to hear. I love that. I put a lot of effort, a lot of sincerity, and I try to be as professional as I can. I'm not cursing. I don't do that stuff. I like the curse, but I'm not. I don't do it on this channel. I keep it really clean. Yeah. So no, it's just great comments, everyone. So listen, have a wonderful holiday, and be safe trading. You know how I feel about this stuff as far as the outlook. Looks like we're trying to finish the year on a negative note. I'm fine to be wrong. I always say when I'm negative, I like being wrong. There's too many people get hurt in these markets. So anyway, folks, yeah, just trying to interact. Yeah, everyone should share. Go ahead and if you haven't subscribe. And like I said, we are working on some rehashed content possibly over the next couple weeks just to stay engaged. And so I'm not disappearing 100%. We'll see what happens. Usually where I'm going, there's no internet. I'm in the process. When I get there, I will be installing Starlink. And installing Starlink is a joke because it basically installs itself. We just got to get the wiring and location and stuff together, and it should be pretty simple. And so anyway, folks, have a great holiday. I really appreciate it. Yeah, Bo, I'm not sure. For sure the 9th, possibly something beforehand, maybe a preliminary stuff. But it looks like the 9th. I was looking at the schedule, looking at when I'm traveling and all this stuff, and there's just that short week to start the year is going to be just really chopped up for me. It just looks really tough. But I will if nothing else, we'll put out a video or something. So keep those notification bells on, and I'll put out a video or something and announce it there. If you're on our mailing list, if you haven't seen our mailing list here, if you go to I can get this down here. If I can get this to go right. All you have to do to get on the mailing list, folks, is go here. That's all. Let me get off the screen. All that's here is you go to kindlereport.com, and you can just give us your contact information. Anybody that's on this list knows for sure we don't spam you, and we put some things out. We don't even probably do 12 emails a year. Probably should. And you can opt out if you don't like anything that we send you or whatever. But it's a place where we can communicate. If you want to be involved in some to set up, maybe conferences and some things that I'm planning for 23, that this is the place to do it right here. So anyway, folks, really appreciate the business. Those of you who are customers, those of you just followers here on YouTube, appreciate it. And guess what? We'll talk to you next year. Have a great evening. Good trading to the year end. Talk to you next year. Bye now. Yeah, by the way, I do have a merch site. I should put that out. I'll make sure we get that out there. Thanks, everyone. Gil, we're going to be doing a lot on the Portfolio Manager next year. Keep hanging out. Appreciate it. See you, Carly.